Mortgage rates jump up again. The wild ride of the mortgage market compares to the wild ride of the stock market and the news internationally. The question is, will we have a similar wild ride in real estate? Well, let's take a look at data and go a little deeper inside. Last week, mortgage rates closed just below 5% at 4.95%, a 0.25% increase over the week before. Now, if you follow me, you know that mortgage rates are one of the reasons why buyers have flocked to the market. Because to buy a property, they can control or buy something much bigger for a lower payment when the rates are lower. And as rates go up, the payment goes up as well. But at the same time, housing prices are going up. So buyers are faced with an increase of payment of 20-25% and an increase in the buying purchase price. What's that going to do? Well, you can imagine at some point it's going to cause buyers to slow down. And take a look at the latest data. This is from pending sales from the real estate agents, and this is compiled. Now, this is each of the 4 regions of the United States, but notice all of them have a deep drop in the last few weeks, and this reflects the time their interest rates have gone up the most dramatically. You can see that the real estate market was solid, pandemic dropped, and then post-pandemic we've had this record period, and now that appears across almost all regions back to what I would call pre-pandemic levels. That's across all regions, which I found that data fascinating. If you go a little deeper, you'll notice overall our sales though are still higher than pre-pandemic levels, other than the occasional peak. We still are at a great sales market overall. We just are no longer in that pandemic period where the sales were unbelievable. And again, that's partially because the rates have gone up and also because now the prices have gone up significantly over these past 2 years. So what's that going to say in the long run as far as the market? Are we going to continue to have challenges? Are rates going to go up? Well, I don't have a crystal ball on interest rates, but what I can say is that the reason why, even at these rates, we still have tremendous demand. And I can say as an agent in the market every day, we still have buyers buying even at these higher prices, because if people make money, one of the logical places for them to put it is in their property. Those professionals looking years out are most confident of that happening. Take a look at professionals for architect service in real estate. The demand continues to grow. And if you look at a chart, even with the drop recently, they're still above this magic 50% level, which is expansion, though it's getting close. We're still in expansion mode. Now, we've been there consistently over the last 8-10 years. During the pandemic, that part dropped right away, and so we have some built-up demand. And that's what we see in all markets, is built-up demand for more housing, where if people who want to buy houses, but for whatever reason can't get into a property, can't get their offer accepted. That's going to be the continuing saga, I think, going forward. So what's one to predict? Well, I thought Zillow did a great job the other day. I saw their analysis. They're showing, let me show you the graph. They're showing their projection for the next 12 months, decreased sales activity, but increased prices. They're projecting year over year appreciation rates of prices still about 15%. And if you think about it, it makes sense. One of the reasons why rates are going up, one of the reasons why housing prices are going up, is everything that goes into the house is costing more money. And so if it's kind of like, do you buy toothpaste now? It's gone up in value. Well, you might buy toothpaste more now of it to stock it in your house because it might be going up more next year. So if you have to live in a house, why not buy a house now if you anticipate the cost of housing to go up more over the next year or years? And housing prices tend to lag behind the general market, whereas the stock market moves right away, or the price of gold moves right away. Housing prices can't go up as fast as they should because of some structures in the marketplace, like appraisals, like buyers and sellers comparing value to the last few months. So we still have some pent-up appreciation, I think, built in the market, and we still have very healthy demand even at these higher prices. So what does all this mean at the end of the day? Well, as I always say, if you have to sell, it's still a great time to sell a house. You're going to get great terms. You're going to be able to negotiate a great deal. But be careful. Don't take it for granted. And I wouldn't play around. I would get my house in the market quickly because rates look like they might go up even more next week or next month. And who knows what that does. Right now, everything's factored into today's price, but it could get worse. And if you're going to buy, Great time to buy. There's a little more inventory, a little less competition, but very important to get qualified at today's rates, at a rate you could get locked in on. As soon as you find the house you want, get that rate locked in and close at that rate. Because what you don't want to do is buy a house thinking that you're paying 4% and find out you're paying 5 or 6%. That would be very uncomfortable. So if I can help you, call me, text me, or email me. My contact info is below. And as always, make